Hi, I'm Gahramanli from London Stock Exchange, and I'm thrilled to have Simon Barribal from Virtu here with me today to discuss RFQ 2.0 order type. Simon, welcome.
Good to see you.
Let's dive right in. We have seen tremendous growth in RFQ 2.0 order type, with ADV tripling year on year with 2.4 bips, price improvement versus BBO, as well as 96% fill rate. I would love to hear your opinion from a user perspective, as well as any client feedback that you might have received.
So from an execution point of view, we've seen a similar execution performance around the 2.4 to 2.8 basis points improvement. We integrated RFQ 2.0 into our ETF-aware liquidity-seeking algo known as FAN, and then also into our VWAP and TWAP algos in Europe. And overall, customer feedback's been very, very positive. I think clients highlight two key areas in which it helps their trading. The first one is having it in an algo means that clients are able to look to access multiple sources of ETF liquidity in a single electronic solution. So they're targeting lit volumes, SI, dark, and RFQ venues within that algo. And then secondly, they're also more able to seamlessly integrate that into their automation workflows. By being able to use similar algos for both ETF and equity execution, that integration becomes far easier. And then in terms of just the growth that we've seen in the usage, and now we're up to a level where in a typical week we're seeing in excess of 100 clients using our ETF algos and executing in excess of $400 million of European listed ETFs each week. And RFQ 2.0 and the LSE are typically the largest market share of that executional notional each week.
Well, I'm glad that you've experienced that growth firsthand. I guess my follow-up question from that would be, as a key broker using RFQ 2.0, how was your overall experience from integrating it to your workflow to execution outcomes?
So I think from an integration point of view, it was pretty straightforward. We were able to turn that around pretty quickly and have it added into our algos. But we were coming at from two different angles. We were coming from our execution desk through demand from clients to embed RFQ 2.0 into our execution algorithms. And then from the market making side of the business, we were very keen to be an active participant in making prices within the RFQ 2.0 model. The driver for that was we were seeing demand from our clients and from our own execution desk to increasingly automate our ETF execution, and with the ability to incorporate multiple sources of liquidity into that, rather than leaning overly heavily on just RFQ platforms with just bilateral trading. I think the optionality of having the combination of an RFQ price and an order book sweep in RFQ 2.0 is really beneficial for our execution desk and our clients when they're trying to achieve their best execution outcomes, and overall increasingly automating a lot of how they're trading.
I'm glad that you mentioned RFQ 2.0 order book sweep, which is available for sub-LIS orders on ETFs, but for LIS and above order sizes, RFQ 2.0 acts just like a traditional RFQ, interacting with market makers only. We have observed brokers using RFQ 2.0 for large trade sizes. I guess my question to you is to broadly your opinion on how do you think the rise on exchange RFQ functionality will be enhancing European ETF market structure, and how do you think it will affect the future of the market?
So I think the key thing here is as European ETF AUM continues to grow, I think it's quite important that we have robust liquidity in the lit order books to underpin that growth. I think in some respects, it's crucial to investors investing in ETFs in the first place. I think that type of liquidity in lit order books tends to be the most visible and measurable liquidity for clients, and really can play a part in forming those investment decisions. But I think all of us as market participants have a role to play in developing a more efficient European ETF market structure. So having a desire or a belief that growing liquidity in the order book is beneficial to the market doesn't make it happen. Just hoping that it happens doesn't really make a change. I think the real key here is innovation. And I think the innovation that we've seen from the LSE and RFQ 2.0, and then additionally brokers like Virtu and others looking to integrate that process into our execution algos, really makes a difference and can start to differentiate why the exchange is an important place to go and help to grow that interaction with exchange liquidity. And I think what we always see is flow begets flow. The more flow that goes off, and perhaps some of those smaller orders can then help develop people to look to the order book to trade larger orders. And I believe these sort of innovations over time can start to shift the balance a little bit, where we've seen big moves towards bilateral RFQ platforms. Sometimes people argue maybe the market's slightly out of kilter there, or there's an over-reliance, and I think maybe that over-reliance can be reduced somewhat over time, and a bit of a movement back towards trading a little bit more heavily on exchange in Europe.
Well, Simon, thank you very much for a very insightful conversation, and thank you to our audience for watching.